It is Brian Shannon from alphatrends.net. Today's Friday, the 9th of April, 2020. We had a strong week for the markets. Look at this performance here. A huge week for a lot of equities. And let's take a look at the charts and make sense of it, because we're at a pretty important level here for the S&P 500. You can see that blue line is, as labeled, the year-to-date volume-weighted average price. So that's the average price that the S&P 500 has traded at this year. This week, of course, we came into the week kind of cautious because we were at the volume-weighted average price from the low, and that was kind of a do-or-die point is the way I was looking at it. If we were going to break below there and hold below it, then I thought we were going to head pretty quickly lower. Instead, we came in and saw a big gap up on Tuesday, and all week we held the week-to-date volume-weighted average price. So this level that we're at right now is not just the year-to-date volume-weighted average price, but it is also a 50% retracement of the drop from this peak to this low. So we've come now exactly 50%, and we're at the year-to-date volume-weighted average price. That tells us that this is clearly a level of interest. A level of interest is a potential area of supply, but as I always say, I don't want to be short with a rising 5-day moving average. So I'm cautious up here, but I'm not bearish still. Looking to the daily time frame, you can see that just ahead we also have the volume-weighted average price from the December 18 low. So this whole area in here, in my opinion, is a clear level of interest. We've got a declining 50-day moving average that's coming down pretty hard on this market as well. So we look at this and say, we've had a very nice bounce. If we take a look at one other tool, that would be the measured move, we can call the low here 220 up to 260, so that's about a 40-point move. Add that to the low here of 245, well, that gives us a price objective of 285. So this whole area up towards about 285 is the measured move objective, as well as the volume-weighted average price from the December low, which had previously acted as support on a couple of occasions. So so going into next week, I'm very cautious in here. We've had a very sharp move up this week. Now it's time to digest those gains. We can either pull back in terms of price, or we can digest in terms of time. Now, of course, we have earnings starting to come out next week, and no one is expecting those to be good. Looking at the NASDAQ, you can see, on the NASDAQ, look, we're only down 5.5%, which is pretty amazing year to date, considering where we've come from. Now, we're significantly more off the peak here, but 5% is a pretty small loss for the year. We are above the volume-weighted average price from the December 18 low in this market, but we're also right at the year-to-date volume-weighted average price here. So let's take a look at the 30-minute time frame, and there's that year-to-date volume-weighted average price. That tells us we're at a potential area where there might be enough supply to become resistance. Other people are saying, hey, we're at resistance. I'm saying nobody knows where resistance is until we back away from it. If we were to take a look at a 15-minute time frame and draw out what might be a potential scenario here, what I want to do is just move this over. And if I was going to get bearish on this NASDAQ, let's say, we might see something like this happen. Okay, we've got some sideways action. This volume-weighted average price fails to hold. The 5-day moving average starts to flatten out and then turn lower. That would get me bearish right at this point right here, or on the after a retest, and then I would put a stop somewhere up above in this area. Right now it's too early to short, and I think it's too late to be a buyer of anything in here. Maybe we run up towards that 50-day moving average. A lot of times what we do is we go up slightly through an important level. People say, hey, it's above the 50-day moving average, or we're back to a bullish position, and that's not the way you want to look at it, because the 50-day moving average is still declining. If we take a look here and say 165, and we'll call that 190, that gives us 25 points. Add that to the 180, that puts us up at 205 as well for a measured move. So there's a lot of reasons to think this is an area where the market is going to have trouble, but so far, the market is not showing that it's having trouble. Big difference between a potential area of supply and actual supply, actual resistance. The Russell 2000 also moved higher this week. It broke beyond what I was calling a cup and handle here for subscribers. We saw that, this was the worst looking group coming in this week. It gapped up above the 5-day moving average, held the volume weighted average price for the week, and then broke resistance. So same story here. Cautious on it. Maybe this market can run a little bit further just due to its relative underperformance. If we take the measured move, let's just call this, let me see here. This is about 90, let's just call it 96 up to 116. So that's 20 points. Add that to 102. 122, we've obtained our measured move objective. So that's a reason to think we have potential for resistance in here. We did get above the volume weighted average price from this gap lower, which is impressive. The semiconductors were down today. They're having a little bit of trouble here. It appears just below the year-to-date volume weighted average price and the declining 50-day moving average. So when we look at a 30-minute time frame here, we closed below the week-to-date volume-weighted average price, but still above the 5-day moving average. So again, if I was to turn bearish on this group, it would have to be something like this. I wouldn't short it below this level. I would want to see it rally up, make a lower high, kind of distribute, do something like this, and then perhaps as the 5-day moving average starts to turn lower and act as resistance, at that point, I would be looking to get bearish on this market, and I would put my stop either above this high, or this high. Personally, I would put it above this high because I don't like to risk a lot. But if there were to be a high right there, maybe that's where you would want to put your stop. Financials had a big day here today. Let's look at the 30-minute time frame here. They're also up against the year-to-date volume-weighted average. That's not the year-to-date. That's off the peak. So let's go to the daily time frame. The year-to-date volume-weighted average price is actually pretty close to the 50-day moving average. But again, looking at the measured move, let's just call this 1750 up to 2150. We've got a 4-point rally. Add 4 points to 1950. What's our price objective? 2350. The measured move tells us it's time to be cautious in here. The 15-minute time frame says cautious is fine, but don't be a fool and sell short. That's all I have for today. Enjoy your long weekend and be safe. Thanks.